Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. We are currently down 3 basis points, relatively flat. Last night Trump initiated the tariff hike from 10% to 25%, and on the 1 hour chart we were much better than what we came out from started in the morning. And I do see the 1 hour MACD starting to point up. I still don't believe we may reach positive MACD. On the 1 hour or 4 hour chart, we're beginning to see the 4 hour MACD is converging, blue line touching or overpassing the yellow line. And as you notice, we also began to see lower lows. On the daily chart, the MACD is also pointing down, and we have the 9-day converging onto the 18-day moving averages. And we still have about an hour and a half in market, and we are still above the 50-day moving average, which acts as a pretty good support. But there's another argument for the bears. That support also occurred not so recently. Last year we found support and then we proceeded to drop relatively fast. So if we were to break down and lose this support, the next support will be the 200-day moving average, which is at the price of 277.24. And if we were to reverse and move on higher, I'll see the resistance between these two price range of the 9-day moving average and 18-day moving averages. And that price is at 291. So if we were to move on higher, and that price movement will be about 1.5%. But if we were to continue on down, that price movement will be 3.3% move down. Onto the next module, I'll compare today's current trend with this trend that dated back to July 30th, 2007 to October 23rd, 2007. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we have an attempt to touch the bottom Bollinger Band, but in this trend, not quite. And then afterwards, we proceeded to touch the upper Bollinger Band right here, and then we found support on the middle Bollinger Band, and then we have an up channel, and we proceeded to go up for several weeks. After that broke down, we immediately touched the bottom Bollinger Band right here. And on to the trend in question, we have, in this instance, a touch on the bottom Bollinger Band, and then right here, not quite a touch on the upper Bollinger Band, but a good attempt. And then we found support on the middle Bollinger Band right here, and then after that we proceeded to go on up for several days, remaining above the middle Bollinger Band, and then we immediately touched the bottom Bollinger Band right here. So we have about 1, 2, 3, 4, 5 points, and 1, 2, 3, 4, 5 points that are similar. So there's reason to believe that the trends or patterns are similar. The forecast or outcome will also be similar. So let's check the forecast model. I'll go day by day, where July 30th, 2007, October 23rd, 2007 went to in past days. So on 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then, the S&P 500 or SPY was down about 50 basis points or 0.5%. Not much, but we do see a downtrend in the making. And here's the line graph that I compared it to. and overlapped it with the current trend. And that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.